Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. If you're looking for some investment opportunities or you're looking at more information about the market, click subscribe. I'm going to be going over kind of a overall market update. I'm looking at the Dow, S&P 500, the nasdaq composite. We'll look at the 10-year yield, and then I'm going to look at some of the market leaders, kind of like Apple, Amazon, stuff like that, and see how they're performing. We're going to look for patterns. And again, if this market's ready to pull back, it may or may not have an impact on some of our commodity investments. And that's why we always look at other sectors to see what they're doing. If they're about to have a big, downward move, it may affect our investments and pull it back some. So let's take a look. Let's see what technology's showing us. So here we go. This is the 10-year Treasury yield. I just threw a downtrend line in here. And most of the time, you kind of break out and then you kind of pull back a little bit or sideways. And I think this is going to continue higher. We've had a lot of talk about raising interest rates. So I do think over time, rates are going to go higher. And you can already hear the Fed talking about it. So I think we'll see this march higher or slowly higher. Now here's the S&P 500. Remember about ascending wedges. We've got this gigantic ascending wedge coming up, and it's basically coming to a point right at the tip. Usually, with a high probability, they usually fall to the break. They break to the downside, and this doesn't mean that you'll necessarily just go straight down in this massive crash, but it could go lower. Sideways to lower for a while. So it could break out and go sideways and, go down over the next 5-10 years. But I mean, obviously I don't have a crystal ball, but this is a large pattern. It's a multi-year pattern. And if it breaks to the downside, I think we're going to see downside pressures. Now, the Dow Jones already broke to the downside. So that one broke to the downside. I think it's quite obvious that it has done that. Now, is this going to crash down like this, or is it just going to kind of slowly make its way lower? I don't know the necessary path, but it does look like it broke its pattern, and it does look like it's heading lower. For the NASDAQ composite, it's still coiling up, given where interest rates are probably going, given what the Dow's doing, given what the S&P 500's doing. I don't see any reason why this wouldn't follow suit with time and break to the downside. This could be something like a shoulder developing, maybe. Or it's just the pattern that, we're coiling on up. And I think the potential is to break to the downside. If you have higher interest rates, I'm looking for a downside break. Now here's Tesla. This is one of the market leaders that everyone talks about. We are hugging the lower channel here. I don't see, looking at this pattern in here, I see one bullish engulfing here, bearish piercing, bullish engulfing there, trying to break out. The buyers can't muster anything together. So we'll see which way this thing breaks. I'm very curious. And if the whole market kind of pulls back, I'm guessing this thing's going to pull back. But we don't have a break yet. For Apple, we kind of came up into this pattern here, broke to the downside, and it's kind of meandering sideways. I think the pressures are to the downside after breaking this to the downside. But only time will tell. And if rates go down, it'll prop this thing up. But if rates go up, I suspect that this would be running into headwinds, and lower prices are kind of expected with rates going up. Amazon's been moving sideways in this channel. I think it's going to face a bunch of headwinds. I think PE's, price to earnings ratios, are going to contract when interest rates go up. So I think all of these, I'm not as, I'm pretty bearish on them. Neutral to bearish. Facebook looks like it's putting in its little ascending wedge pattern. And if it doesn't break out of this and break to the downside, I expect more downside. I expect a peak. And same with Google. Google's actually looking very strong here. But you can kind of look, you can kind of see where we're contracting up into a point here if you were to look. So I would suspect that this is also putting in kind of a more of a topping pattern here. See how it's contracting up into a point? That's what I'm seeing there. And I bet you it's going to break to the downside. So overall, I think if interest rates go higher, I don't think they're going to do very well, or they're going to have a pullback first before moving on higher somewhere. So this could very well affect our commodity investments. The whole market could sell off and pull back like we've been seeing, and that may continue. What I'm doing is nothing. I'm just watching. I'm looking at the ratios, which are cheap. I'm looking at real estate, which is still doing well. And I'm going to continue to monitor those things and see how they're doing. In the meantime, all the signals are good. You just sit there and do nothing if you're in commodities. It could be a very wild ride. And I think some commodities, they're going to pull back. Copper definitely has been pulling back. Some of these other ones. So we're going to watch and try to see where it gets its footing, to turn back and move on up. But looking at this and this sector, I don't think we're going to get any help here. I think, if anything, it's going to add to more selling pressures. And usually when these guys sell off, if we see a big move down, you could see margin calls, more selling, in kind of a deleveraging process. So hopefully, I'll stay on it. I'll keep posting updates on this. And right now, it does not look favorable. If you guys like this content, give me a thumbs up. Thank you for listening. This is Finding Value.